Friday, we covered China's A50 futures market, which had been trading down 3% over the coronavirus outbreak. And now it seems like it was merely a preview for what was to come today over in the Asian markets. On Monday morning, China's markets finally reopened after an extended Lunar New Year holiday as authorities reacted to the crisis, and it was met with a massive wave of selling, which saw the Shanghai Composite crashing 9% at the open, wiping out 12 months worth of gains in a moment's notice. Now, this sort of one-day loss has not been seen since the 2015 China market crisis. Interestingly enough, this sell-off occurred despite the Chinese central bank announcing earlier in the day it had barred short selling. But perhaps as an oversight, it did not ban selling altogether. Now, as Chinese stocks started to collapse, a flight to bonds saw 10Y Chinese bonds tumbling in yield to 3%, matching the lowest yield since late 2016. Now, China's sell-off seemed to spare no one, with iron ore contracts, copper, crude, and palm oil all plunging by the maximum allowable 8% before the safety filters kicked in. Now, as Bloomberg noted, regions accounting for vast swaths of industrial output are now under quarantine or being told to delay restarting operations until at least February 10th. That means about 90% of China's copper smelting, 60% of steel production, 65% of oil refining, and 40% of coal output is trapped behind coronavirus lines. Now, the People's Bank of China did step in earlier in the day to inject 1.2 trillion yuan in liquidity in order to prop up their own repo markets, followed by additional intervention later that day by also cutting rates on both its 7-day and 14-day reverse repo rates. Now, U.S. futures, on the other hand, have surged since the open and are up 0.7% or 21 points to 3,245 from Friday's 3,223 close. The concern now is surrounding the global economy, in particular, those developing nations in Latin America and Africa, which in recent years owe a majority of their growth to the Chinese investment, development, and exports. Now, the Chinese downturn threatens many global industries depending on the scale of the outbreak crisis. Bitcoin and wider crypto space in the wider crypto space should be considered vulnerable as well. Even as we've started to believe our safe haven asset, we need to have our eyes to the effect that this could have on our market. Although in recent months, we've been discussing Bitcoin as an uncertainty hedge, it's undeniable how popular investment in blockchain is in China, and a major financial squeeze on their economy right now, impacting how they manage their speculative crypto positions. And this is something we should all be thinking about. This is something we should all be concerned about, and looking at the appropriate steps that you can take to manage your position. So let me know your thoughts in the comment section down below. Are you taking this into account in your fundamental analysis? Have you taken any steps to capitalize on this as a trader? Have you taken any steps to protect yourself as an investor? I'd love to hear your thoughts. Again, we'll take